Hello everyone, I got a big update on AMOA, but first, the portfolio. Well, what do we got? Well, SpaceX, I closed. Small little loss, 7%, not bad. One of the reasons is there is this 150 pin sitting here, and I didn't want to wait a week to gamble, losing 100%, or, remember, I bought it for 367. So 140 minus 367 is break even, right? That's the break even point. So that's just a break even. So, would I want a 10 or 10, 12% drop just to break even? If that didn't happen, I would lose 100%. So I don't want to do that. There was a big pin there. I could probably show you on here, right? Let's see. Let's see if it's on here. It's a put to pin. Is that it? Is this gonna work? Oh, this won't work. Um, yeah, I made some updates. It's gonna have forward data, but it's not gonna have backwards data. Right. Right. I'll explain that in a second. Oh, it was here, but it's not back. It's not backfilled yet. The stats aren't backfilled. I'll get to that in a second. But there was this put thing here bouncing, and so I took it off. Now it looks like it kind of disappeared there and it moved up, but whatever, fine. Who cares? Um, NTNX, top to bottom, I suppose. Got a nice move here. So let's go to daily. So nice move here. I'm going to turn off AMOA now because it's updating. And on this move, at the very top, literally the very top, like right here, somewhere in here, I put out an offer. The offer was 460, I think, at the time. 470, I believe it was. And I put an offer for 450. So it wasn't at the mid. And I did 450. And then someone just bought it right at 450. And right then it just started to reverse. And what I did is I converted this outright to a call spread. So this wasn't here before. So it was just an outright. And then I just took the 15 and sold the 65s for October. So now it's a call spread. And you notice I did it for 450. So I got all of my money back plus extra. So I got $6,000 back plus $770. And what that means is that as long as the price is above $50 in October, I'll make $770 minimum. If it's at or above 65, I make $23,000. So there you go. That's a good bet. And that's what I'm going to do. So far, so good. Really good trade there so far. SPSC, like I said, I highly doubt this thing is going to rise. There's this big call pin here. It did disappear, by the way. So maybe one more week I might have a chance to break even or get out of this with something. I don't know. I doubt it. The market is so thin on this name that there's just no one there to take the other side of your trade. So even if it rallies, I don't even know if I could get out. I'm not kidding. So that one's probably a loss, but that's okay. So nothing going on. Nice little run up, but it looks like we pulled back. That's okay. Stocks go up, they go down. Bunch of noise. As long as we just kind of trend upward and not push down, push down, push down. And it's not, we don't want it to go this way. We want it to stabilize. Maybe there's some rounding here and then push higher, and then that's where we make some profit, right? And these percentages are not updated. They're slightly old. I did put on a micron call spread for November, a 1200, 1500. Why? Well, there's a pullback, right? And I just want to get in INIMs. That's probably it, right? There's no pins or anything here, but this is a good risk reward. It's 280%, I think it was 260, something like that. So it's a good risk reward, and got plenty of time. We're gonna hit this September October earnings, and I'm just looking for one more push higher. Still a lot of growth here in these names, out till like 27, 28. And so we'll see if the market still has a stomach to buy dips in these, which I think they should, but we'll see what happens. So that's $5,560. I only bought one of them. Wix. I did put on Wix. Now, Wix is more of a tail-ish kind of trade. And what I mean by that is this sigma is not gated from my strategy. It's too far. It's too deep. It's too low from the call entry. But some of these do work in the back test, and not all of them, but some do. Most of them rally into the put side, which is where I have my call entry. They consolidate and then they rotate over. So this one is a smaller position. It's like $3,000, something like that. And if it does rally in here very quickly, I may just take the profit. But if it chugs and chugs and chugs and then through earnings it blows through it, well, there you go. I'm gonna hold on to it and see what happens at the time. But usually they rally and fade. That's usually what happens. But the back test I had there was only like 2 years, and I'm gonna go into some more information about that. I do have VNet and LYB on the watch list. They're kind of sitting there. I think LYB is the March one, which is way out here, or maybe it's VNet, can't remember. And then the other one is January. So those are short-term. VNet is Chinese. I don't know. I don't know if I want to buy it, but Chinese things always have a lot of volatility, so maybe it'll be pretty fun. Yeah, anyway. Not much else on that end. You could just see I'm just kind of adding names as they come up and building out the portfolio slowly when the names come to me. And that's all you can really do. All right, the big stuff. AMOA has been massively overhauled in the back end. I mean, massively. And it's all good. So where do we start? Well, I think I can't remember everything, but I'm going to go through it. I think the first thing is some quality of life. If you highlight all the tickers and right click, you can add to a watch list or create a new watch list, right? So that's kind of good. If you search through names, you can just add them all to watches. I could be like, junk or something like that, right? It's going to take some time. Hold on. There we go. I'll have to improve that. But you can see it's all in junk now, right? There we go. Okay. What else do we got? Well, let's just go left to right and then down. That'll be easier. There's new dealer positioning chart. Let's go to that. This is your standard DEX and GEX. Maybe that's what I should call it, because that'd be clearer. But here's your GEX for NTNX. And you can see we're right at the peak of gamma. And typically, as you know, is that when gamma is positive, the dealer becomes a seller. When it's negative, they become directional. And when they approach this kind of rounding up here, they start selling and selling and selling more. So this becomes an area of resistance, the peak of the curve. And down here is technically the support. And obviously the flip point is marked here. And spot is where it last closed. And same thing for delta. However, delta is monotone. You're not going to get those roundings like you see on gamma. And so these ones will only have a balance. So you won't have a peak or support. You'll just have a balance point. And that's a good head check to see what side the dealer is on. And that's a good idea. So usually, if they're on the delta side, and it falls down to the balance, this will probably act as support, especially if it's aligned with GEX. You can also break this down by expiration. So next week is all pure gamma. Week after, pure gamma. September, pure gamma. October rounding of gamma, so that could be a squeeze, right? But it gets fatter, you can see. So anyway, you can break it down by that. And SPX also has this. There we go. It's a bit bumpy. I don't think you usually see this bumpiness, so... But anyway, I think it's close enough. Whatever. All right. But these are pretty accurate chains. I'll get to that part real quick. Okay, pins. Pins does a few things differently, and I'll explain. One thing it does is it actually shows you the aggregate gex, in this case the gex because I'm on gamma. So you can see I have resistance, I have the flip point, and the support point. And that's very important for you because you could see where gamma is petering out. I could see where there's large puts right here, large puts. I could see where there's a flip point going from positive gamma to negative gamma, and this is where that negative gamma would run out. And I could kind of eyeball and see that in the past it bounced there, and it busted through those put gamma walls. Remember, it's directional, so they have to cover. And now they're up in this strong gamma. And that strong gamma is you're going to have selling. They're trying to sell, right? And now they become directional, and then they're selling. So up and down, up and down, up and down. So that's one thing. And so historically on the site, you only had 2 years of data. Now you have over 13 years of data. So if you scroll back, it's going to chunk load all the historical data here for NTNX. You know, you could do like Apple. And I'll improve the performance of the queries. Right now it's, I haven't done that yet, but I'll make this a bit faster. But you can see it's just chunking data, right? Chunking data. I'll just go all the way back. 2013. There we go. So you could see that you have all history back to 2013. You could see on large caps now, you could see the GEX information, which the original charts, you can't really tell any information about what you're getting from this. So now you have the GEX levels. And everything is still there, like your per expiry or expiration. So if I go on expiration, this breaks down the GEX by the expiration. So if I zoom in, see if I can show you. It's probably hard on the smaller scale, but you could see like on this expiration, that's the flip, that's the resistance, and here's the support, green, purple, yellow, orange. If you right click, there's these lines and labels. Where did I put this? Pins. Support color, resistance color, flip color. You could change these if you want. And then highlights like the large stuff. I added that. Lines and labels, so you can show those GEX labels if you want. The DEX or GEX labels, if they're annoying to you. But you can see I still have the aggregate one up there, but now it's broken down per expiry. So if that's what you want to look at, that's what you can look at. I just recommend aggregate relative. You're just looking for turning points in markets, right? And that applies to delta. So if you go to delta, you can see I have the flip point of delta, and it's sitting on a large put wall there. So that's interesting, right? Now, by the way, these are not turning points or support. I just want you to be aware of that. So if you see that and the price is sitting on that, don't think you should be placing trades. don't do that. I'll explain that sometime in another video because I got a lot to go over. But GEX, typically if you're in a bull market, if you're at or below GEX and you're going to trend, that's where things usually rotate, especially if you're sitting on one of these large put walls where the gex flip is. And we'll get into that a little more. But open interest is still here. You're not going to get any, it's just the old view. You're not going to get any dex or anything on that. So all that's the same. Historical obviously goes back all the way to 2013. But again, I'm secretly doing a backfill of all of the stats. And part of the reason there is I went through every single stat, 350 plus, and ensured that the data was accurate. So I ensured that the delta percentage of float was actually deriving free float correctly. And in order to do that, I downloaded all SEC filings for all equities, and I parsed all the information. Free float only comes once a year, and it's in a dollar format, so you have to kind of like back out the free float. So it's the closest I could get to kind of like paid data or data that I have daily snapshots of, but not historical, and they're very close. So I did my best there on the float, but all the stats are backfilling. So you could see I only have a few recently. And then if I go like really far back, you'll see like, okay, look, it's starting to backfill. See? So now delta as a percentage of float goes all the way back to 2014. So you have a lot of this information now to really tell us, and you can see like where the backfill is. It's right there. That's where it left off. And so it's continuing to go. And so you can see I have, I don't know, 5 more years or something to fill in. But it's progressing right now. So I think by the time you see this, hopefully it'll all be backfilled. And you'll know because you could just go on this chart, load up Apple, do delta percentage of float. And if you see everything there, all the stats are there. All right? Because it's doing it by day. Okay, nothing else there that I can think of. Oh, volatility. So one thing that was interesting, and obviously this has to be backfilled as well because it is a stat. And so like these 90-day, 30 days or whatever are stats. And so this has to be backfilled in order for you to get the P90s correctly and the other lines that show up here. So remember, that is a stat too. But I want to point something out. I went through SIBO's data, and SIBO's data was actually pretty good with curves. But what I noticed is there's a lot of inconsistencies on certain equities, and sometimes even these large caps where it's very complicated. But in order to derive a correct implied volatility, you would really need a bid and an ask. And you take the mid of that. Sometimes on VIX, sometimes down here on the put side, you only have an ask. You don't even have a put. So you have to do something special with the curve there. And SIBO did great on indices, SPX, VIX, things like this, but certain equities sometimes had very sporadic and very ugly looking implied volatility curves where you would have something. I went through all of, well, not all of them, but a majority of them on some dates where you'll have a curve, and this has to do with their data set, where sometimes you'll get, how come this isn't printing? Here we go. Where you'll have log moneyness down here, you'll have the implied volatility here, and you're going to create a curve. So this is log, oops, I'm using a trackpad. It's backwards. Okay, log moneyness, okay. And you'll have, I don't know, 10 or something here, 10 or something here. And you'll get a dot here, 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 like this. And a dot up here, a dot down here, right? And what you're doing is you're trying to derive a smooth curve through the quotes. And there's a lot of arbitrage going on in the options market where dumb people come along and buy this one. So a dealer sold it to you, and because of that, they could just sit down here offering it to someone, right? Well, they're offering, and then now they're trying to buy it back down here. And this is technically illegal because you could do, there's something called put call parity where the put side implied would have to also equal that implied volatility. So this side here would have to equal this side here. So the curve would have to bend up like that, which is not going to happen. There's also something called Lee bounds, which I'm not entirely sure what it is, but it is a statistical model telling you that the curve has to be within a certain bound. It's 2. I don't know if that's 2% or whatever that 2 number is. But that tells you that if the curve is sloping beyond the Lee bound, then you can arbitrage it. And so a lot of these curves that are made have the Lee bounds inside of them to protect from arbitrage. Okay, but before you had these wide prints like this, and SIBO's surface would look really jagged like this, right? And then sometimes it'll just do something crazy like that at the end on your tails because there's just like one-sided quotes up here, right? There's no one down here. So that was so I didn't like that. So I went back and I found some really high quality data and I imported all those curves and they're all beautiful across equities. I saw, so you're going to see very clean curves coming out of this. Going forward, I'm deriving and calculating all the curves myself, and I compared these to the data set I have, and they're almost identical and very close. So I'm not worried there about any of the curve data, but now the quality of the curves are going to be much, 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 much better. So I'm happy about that. Anchors is a derived stat, so, oh, yeah. See, it's backfilling right now. That's why you see that line. And if I go overlay, that's also a derived stat, I believe. I think so. Yep. But you can see the curves and how you could see the drop in the implied vol. So you can clearly see that in VIX. Heat map. And that's very bright. That's a derived one, so you'll need stats there. But yeah, everything's beautiful and curvy. Very nice. And you can see the tilt up on the put side. That's what you want to see in VIX. This one might be a bit iffy. That curve down might be a little bit iffy, but it's so far away. So I would just cut it off right here. I don't worry about the downslope. Okay, dealer positioning we went over. Bars doesn't change. Estimates doesn't change. Okay, table. There's some bugs in the table view. There's a bug where if you were on like sell, for example, on a pin chart, and then you went to the table view, it would reset and show NTNX as the quote-unquote ticker you're looking at, but it wouldn't say anything. And then you go back to pins and you would load NTNX. But now, if I'm on sell, it'll highlight sell. So when you're flipping, you can see like, oh, you know, sell has so-and-so and so-and-so. So that's fixed. On this page as well, I have short float correctly calculated now. There's a slight bug with free float, so these are correctly calculated now. I also have short volume. That's a new column, so now there's short volume. Nothing else on table. Chain, if you're on the latest snapshot or the current date is after the latest snapshot, all these values are live. They're all live values. So you're not going to get a snapshot of 710. You're going to get the actual live value. So when the market's live and you refresh, you should see these quotes come in and change, which is kind of good because when you're constructing a trade, and here, these will be, well, it's not going to update live in this view. You have to refresh and stuff. That's kind of a bummer. But this is the closest to live you'll get. Another thing is that I fixed some of the scrolling here, so you can pan normally on here. So there was like, you couldn't pan. And so now there's panning. But all these are live now. So if I refresh that, you're going to get a live. So that's one way, is that just click one of these and click, and then the price will like refresh. Okay, that one's not traded. I may have to have an error there or something. Okay, so anyway, that's good. However, when you go in the past, you're going to see the old date of the expiration. Okay? All right, what else? The gex and dex are in here. So I could do dex support within 2% of close. So I want the close. Can I do below? Within's probably fine. And I want market cap. Let's see. Market cap greater than, I don't know, some big name. And then I'll run. So one confusing thing I had feedback on is they didn't know how to run the screen or close it or whatever. So now you either run or close. And it's much clearer. Like, I want to run it, so I'll click run. And it ran in the background, see? And now I could sort it if I want, and that'll auto run it as well, right? So that's auto running. I should probably switch that to running so you know. And then close here or close here, it doesn't matter. And then it won't run it. It won't rerun it for you. So if I go to gamma, you could see that the price will be within 2% of that gex, right? So these are stats now. So DLR, let's see. I'm going to change this real quick. There we go. DLR, you could see I'm at the gex support, right? So maybe that's an area where I can maybe buy some calls at the flip point and target 210 as an idea. Maybe, right? I don't know. Who knows? So now you could filter by that. Anything else on there? No. Okay. Another thing. Splits. Originally, splits were handled very poorly. The data structure was not correct enough to handle splits when they came in live. Live means like the next day rolls over and the market's open. Now everything is dynamic and you'll always get the right price. You'll always get the right views. For example, there was the, what is it? KCal? KLAC split 10 for 1 on the 12th. But the chart was all messed up. Well, not anymore. It's all dynamic. And so everything is split correctly. Even the historical data is split correctly. Look at that, right? And now you have splits on here and you have dividends. So those things are new. You could hide those by markers. So earnings gone, estimates gone, splits gone, dividends gone. So you can hide them there. So you got splits. Another thing, watch list with splits. Well, I used to store just the ticker, but what happens if something gets renamed, like Facebook to Meta? Well, this will auto update for you in your watch list. You don't have to do anything. Same for your price alerts. If you set a price alert at 115 and it splits, well, it's fine. The price alert will show you the price at what pre-split that you did. So you don't have to do anything. Your split will stay relative to the split. Your price alert will stay relative to the split. So that's great. So all the splits are working. One thing here too is like, let's load up Meta. Well, Meta used to be called Facebook, and they transitioned, what, 2022 or something? So if I go back, well, what are we going to see? I'm just going to load all data. I'm going to have to figure out how to load this quicker. But look, all the history back, perfectly split with Facebook's era, right? So the site is dynamically and contextually aware of the same entities. Another issue we had was SpaceX used to be a SPAC, and that data existed in the system already. And so when SpaceX came along, it just inherited that data, not anymore. So everything is bounded by a unique key, and that's a bit complicated to deal with because the SEC assigns a CIK, and they're not unique. Sometimes when an event happens, like Google has the different class shares, A, B's, and C's, and their SIC changed even though they're the same company. So there's a lot of little weird dynamic things that go on with uniqueness, but everything is correctly handled. And there's that put wall I was talking about. And here's a flip point. So here's the SpaceX trade, right? If it rallies, I'm screwed. I'd lose all my money. And I just don't want to deal with that with 1 week left, right? I like having some time on my trade. I like to be profitable in the trade with a lot of time left. It's just easier to deal with and not, just get out of the gambling nature. What I should have done here is I sold it right here. I sold it right here, like literally on the open. And we had a big move down. The trade was already up 100% in a day. I should have closed it there. That's crazy annualization, and I didn't do it. So that's a tip, right? If you have really big moves right after you buy it, you should just close it because that annualized rate of return and that convexity will give. And now I closed it over here for a slight loss, right? So, and I should have looked at this pin stuff, and I would have saw a bunch of buying here on the pins and a push. So anyway, live and learn. Anything else? Anything else that I can think of? No, it's a huge update, and there's probably some bugs that I haven't worked out myself, but I'll monitor all the importing. I'll monitor everything. Okay, what does this new infrastructure also gives us? Well, I can now do live charts during the market open. And I'm gonna attempt this for every equity. And if I can't do it, then I'll just do it on SPX or maybe some of the high flyers or something like that. But it does open up for a live view of the delta, the gamma, the flow, and things like this. And I'll work that out. And I don't want it to be like other services. I want it to be kind of like my own view and more dynamic, where the GEX and the DEX are changing live, and you can overlay it with existing open interest and whatnot. Okay. Another thing that this gives us is that open interest lags by 1 day because the OCC has to calculate it and disseminate it to everybody. Well, my old provider would give it to me at the end of the day, 5 p.m. PST, but that open interest is lagged a day, so it's for yesterday. The new provider gives this to me in the morning for yesterday. So before the market even opens, I have access to all the open interest from yesterday. So you're going to get the open interest before the market opens. And that's highly, highly wanted, because if you don't, you have to kind of decipher through volume how people are trading. Like I could see like maybe there's a spread trade here that people are trading down to the 135 next week. Who knows, right? I don't know, because that could just be a lot of contracts trading hands. I don't know if someone's holding that or what's going on there. So having it before the market open is really nice, right? Okay. And what else? It also opens up to futures. So I can also implement futures, options on futures. And I don't know if anyone does this. I haven't looked, but we can structure the charts and everything the same way on futures. Now, that's a little bit more complicated because of how spot is handled, but I'll see if I can work through it to get futures on the website. So there's a lot of cool things coming, but the whole underlying infrastructure is now very solid and massively less bug free. It's highly more accurate. And if you find any bugs, please let me know. Maybe through the MCP, maybe there's some bugs or something, but I tried my best. And so I'll let you guys go, and I'll keep you update with anything else that comes along. Thanks.